Happy Friday, everyone. Today is the 14th. It is Pi Day 3.14. So today is Pi Day. It's also St. Patrick's Day, the day when everybody is Irish. So you can all go out and drink some green beer. But did we get our relief rally finally today? Looks like we did. Will it continue? That's the big question. So I'm going to take a look at that here in 1 second. As always, I am not a financial advisor, so I can't give you advice. I'm doing this for educational purposes only, and you have to make your own trading decisions. So had a nice little bounce today, so we shall see how that works out. Let's see. Okay, so let's take a look at the homepage first. This is the website, breakpointtrading.net. You can get to the YouTube channel from here, also my free newsletter from here. There's no charge for the homepage, of course. The market bias, you can barely see it down here, but it went sideways. Did not, for the first time, I think ever, I did not have one single update on the market bias. You can look at this. There are no boxes on that anywhere. So everything stayed exactly the same as it was yesterday. Good news is there were no more bear signals. Bad news is there weren't any bull signals either. So that means we are hopefully maybe treading water at the bottom. We'll see. I've been saying that I was expecting a relief rally, and then I think we may head lower after that. So be cautious, but this could last for a couple of weeks. Next week is options expiration, and I will do Max Pain probably on Monday, and we'll look at, I expect Max Pain to be positive next week. So I'm expecting the target for both the indexes and for most of the major stocks to be higher for the week. Max Pain I usually refer to as opposite week. So whatever the market has been doing, then the week of options expiration, more likely towards the end of the week, usually does the opposite. So expect to see the rally continue into next week at least, and maybe for a couple of weeks. So let's take a look. Let's look at the dashboard first. Look at equities. Equities are higher. Dow up nicely, 674 points. NASDAQ up 450. The VIX came down substantially. We'll look at that in a minute, but it's still not below 20. So good news is coming down, but we need to come down a little bit more. Bonds, 20-year came down just slightly. 10-year went up slightly. So nothing too dramatic there. Gold continued its run, actually just kind of went sideways today. So gold just hung in there. And crypto, Bitcoin up to 84,000 now. It was down to 80,000 at the end yesterday. So Bitcoin made a comeback today as well. If you look down here at the sector summary, you can see technology at the top. You can see how green everything is. These are the advancers versus the decliners. So if you'll notice, energy, almost 90% of the stocks in the energy sector were advancing today. Technology, 80%. Real estate, 85%. Industrials, 85%. Financials, 86%. So lots of advancers, very few decliners today. Technology at the top. Discretionary is the fourth one down. None of these look great still, but they are starting to show a little green shoots, maybe poking their heads up. So even healthcare, staples, actually it's still down there, but what ended positive for the day. The industry groups, airlines, semiconductors, construction. I'm going to show you something on semiconductors. I talked about this yesterday, looking at the new Dow Theory. I mentioned it yesterday. It might have been giving us a signal yesterday that the rally was coming, and we'll look at it today also. Aluminum, automobiles, real estate, metals, travel, software. So software and semiconductors in the technology side. Over here, Gorilla Technology. Looked like it was starting to head lower, had a nice rally today. Rubric, really nice rally today. Soundhound, not just starting to come back. So that might be a beginnings of something on SoundHound. Let's go a couple more in here. Robinhood, Fubo, all of these starting to poke their heads up. So if we have a short-term, couple of weeks worth of a rally, these are stocks that you might want to try out. ACM Research, which is a semiconductor, actually broke to a higher level. Celestica was higher. Go to number 4, see what's here. HIMS. Nope, not much with HIMS. Well, how about the bottom? So XPEV was number 1 last week at the top. It's starting to pull back. Anything else in the bottom that's of interest? Abbott Labs continuing to go lower. Mondelez, some gold stocks. That's about it. Nothing else of interest there. So let's go jump in. First, go to the website and to the charts page. Actually, we're going to go to the home page. Since today is Friday, I updated all the weekly charts, so I want to take a look at some of those. First one I want to look at is the secular bull market chart. So this is one that is very important. Secular bulls last about 18 to 20 years. This one started officially in 2013. Many people will say that it started in 2009, which, basically it did. But you don't know if it really is a bull until it breaks the previous 2 highs from the secular bear market. And that did not happen until 2013. So officially 2013, but you could start counting from 2009 if you wanted to. But the important thing is the momentum. You can see momentum is lower. I drew these arrows. That's negative divergence as the market has gone higher. So it looks like it's beginning a pullback right here. This is a monthly chart, so it could take a while for this to come all the way back down. You can see in 2022, which I've been comparing this year to, here's the MACD right here. Came down to that level, came a little lower than the previous lows, but not as low as just after the 2013 breakout. So it's starting to come down, but it's still got a ways to go. It needs to break the 200-week moving average. That's pretty far to go still to break this secular bull market. So nothing saying the secular bull is done. It does look like a pullback is in store, though, and it could be an extended pullback. So let's go back and take a look at the charts page, and we'll look at on the index chart. So on the charts page for subscribers, this little button that says index charts has the John Carter monthly squeeze chart on it. I've talked about this quite a few times in the past. John Carter showed me this back in November at the Money Show, and at the time there were no dark blue bars. The light blue one right here, the last light blue one, was the November bar. So he showed this is 2022 back here. He said, if we get 2 consecutive dark blue bars, and he wants to see 2 in a row, then we're likely headed for an extended downtrend. So that was before any blue bars appeared. So we've been watching this for a while, and we got one in December, we got one in January, and we had one in February, which is over now. We're in the middle of March. So March is lower than February, but we're not done yet. So we could get a rally, which could push this up, but it has quite a ways to go get back to light blue again. So I think that this is still indicating that an extended downtrend could be in store. By the way, this 89 number, which is the level that this is at, was at 93 last week. So even just the last week, it's gone down lower. All right, so that's one to look at. Let's take a look also at the Dow Theory. So I talked about Dow Theory on Technical Tuesday this week. You can go back and review that. This is the old Dow Theory right here. And you can see this is industrials versus transportation. And you can see they both ticked slightly higher. The industrials went higher than yesterday's open. However, the transportation did not take out its bar from the day before. So that is an inside day. So that means that it is weaker than the industrials. So using Dow theory, it says we should not necessarily trust this rally, at least not yet. So let's look at the new Dow theory. First, we'll look at equal weighted NASDAQ versus the equal weighted S&P. Both of those also had a nice rally today. And in fact, the S&P looked a little bit stronger. They both look pretty similar, but S&P might have been slightly stronger. But look at the momentum up here, starting to curl up. These are daily charts. So on the NASDAQ, it actually has a light red bar. So that's better momentum than yesterday. We don't see that yet on the S&P side. How about semiconductors? This is the one I showed you yesterday. I said that even as the NASDAQ 100 hit new lows, semiconductors didn't. They stayed up there. But look at it now. Look at it today. Yes, we had a rally on the NASDAQ 100, had a nice rally. Came up and basically almost even with 2 days ago. However, look at semiconductors. They are moving higher substantially more, much better strength than this one. Both of them have light red bars up here, but the semis are getting ready to cross on the MACD. So again, this is giving us advance warning that the rally could continue at least temporarily. And then finally, communication services versus the internet group. Communication services ended a little bit higher than the previous bar, but internet is an inside day, just like that first one that I showed you. So it's not really giving me a convincing signal that it's going to get higher, but semiconductors are. So that's actually good news. All right, let's take a look at the portfolios page, and I want to show you something here. First of all, for those that are tracking this, we're looking at this on a long-term basis and a short-term basis. The long-term is the primary trend. The long-term had gone to a buy signal on November 3rd of 23, went to a sell signal on March, or go to cash signal, I should say, on March 7th, just last week, actually. So for that period, it gained 34%. And if you were using the 2X or the 3X ETFs, which are all down here, I've added something I'll show you here in a minute, then you could have had 68 or 100, basically a double in that time frame. So this one here would have given you long-term capital gains. But if you didn't want to go through the downtrends in that long-term, and I'll show you what it looks like. So here's the weekly. There's the vertical blue line is the go to cash signal. So as of today, we have not gone to a short signal yet. I said before that to go short, I'm waiting for a rally, and I want to see when the rally gets exhausted and starts rolling over, and that's when I want to short. So it's not yet. But here is the original, this is the November 3rd buy signal. So we had about a 7-week period where we were in cash right through here. And then we had a buy signal here a year and a half ago. And these are the downtrends that you would have had to live through right there, right there, right there, right here. But you would have been able to take long-term capital gains just by following this market timing strategy. The short term, on the other hand, went to cash even before then. So the short term went to cash back here, actually right here, this day. And then it went to the short ETF, the inverse ETF, the very next day, the 24th. So it gave a go to cash signal on the 23rd, and it went to a short signal on the 24th of February. And as it continued to go lower, I said at the time that it will stay in a short position until it breaks above this line. And it did that today. So that was the go to cash signal. And you can see today we are in cash. So there's the whole trend. This is about 3 weeks worth. So February 24th to March 14th, total of 6.7% gain. But if you were playing the triple ETF, triple leverage ETF, it would have been a 20% gain in 3 weeks. Right now it's in cash. So all of those gains are protected. We are not moving these anywhere yet. Going to see what, wait and see what the market does. And if we do get a rally, we probably won't go to a long position on either of these. Although we might go on the short term. We might go to a leverage long. We'll see. Keep an eye on this next week. But what I added down here, first of all, these are the charts for each of these if you want to look at them. So if you're looking at the SQQ, that's the chart, and it shows you the line I was waiting for. We came right down to that line today, and that was the go to cash signal right there. So that's why we went to cash. But those charts are right in there. So what I added was relative charts. So these are relative, the long ETF relative to the short ETF. So I'm going to focus on the NASDAQ, the 3X. These are 3X charts. So the TQQ is the 3X long and the SQQ is the 3X short. So watch what these do. This is kind of cool, I think. So the top is the relative chart. Relative chart means looking at one compared to the other. So, oops. I meant this to be the TQQ. Guess I didn't update that. All right, here's TQQ. So this is the relative chart. So this is looking at one versus the other. Basically, it's just dividing the short term into the long term. And what that results in is a chart that if it is increasing, now I don't have a price on this chart, I only have moving averages. So it's a 5, 21, and a 50-day moving average. So if it's moving higher, then the long ETF is outperforming. If it's moving lower, then the short ETF is outperforming. And where the moving averages line cross is the time to think about getting in. So the time to get into the long version would have been back here in September, right in through this period. You could either do it right there or wait until the 21 crosses the 50 right there. And down below are the two charts side by side. So we've got the long chart down here and the short one down here. So you can see, I'll show you what this looks like. So the relative chart crossover right there. So just follow this down. This is also across the 21 moving average, which is my signal to jump in usually. So that would be the time to get into the long triple leveraged ETF and get out of the short side. So the moving averages went above each other. They moved higher. The relative charts didn't really go back until right about here. Excuse me. This one though really didn't do much. So you could have been a warning sign, pay attention, watch what happens, but it went back up. Right here was more important. It did go below. 21 went below the 5 went below 21, and then they dropped below the 50 right here. So you could have got out right here and back in right here, but you definitely would have been out over here. So the go-to cash signal was when the 5 crossed the 21 on the relative chart, meaning that the short version was outperforming the long version right there for 2 days in a row. And right here, February 24th, was the day that we went to the short. We went to the SQQQ. And if you look at the bottom, that's the SQQ at the bottom. That's when we went short down here. And this is when the day before probably is when you would have got out of the long version, but somewhere in here, get out of the long and get into the short. And we stayed in the short until today. Now you can see the long is starting to move up. The short is starting to move down, but these still have a ways to go before they actually cross. And this has a ways to go before it crosses the 21. So this is the reason I'm not jumping back into the short ETFs just yet. I want to see if this rally goes up to this 21 and then gets rejected and heads back down. So right now we're in cash and we will stay in cash. So that's the new thing that I added. It's got them on the S&P and also on, let's see if I did update this one. I'll have to check the other one. So this is the small caps right here. So you can see you would have been out of small caps back here. TNA is the long version. TZA is the short version. Would have been out for sure up here, and then would have stayed out because it's below the 50. All of these are below the 50. So you would have been out of the long and not gotten back in. But you could have got in the short side down here almost at the same time. And so that's TZA. Would have got in at $11 and probably would have got out today at about 17. So $6 gain, that's about a 50% gain in roughly 3 months. Not bad. So that's the way those work. That's something that I just added. It's something that I'm going to start tracking. I think it's a pretty cool way to just tell when it's the right time to get in or out of one of those. The last thing I want to show, and then I'm going to probably end it for tonight. And this is really a reminder, but I was talking to someone today about this. Someone that likes to do options, likes to sell puts or sell calls to generate income, usually on a short-term basis. And I've mentioned this before, but I want to reiterate it and talk about why it's important. So in the Magnificent Seven, these are all very liquid stocks. I added Lilly in here as well. But anytime this short-term, this first column gets a box around it. Today, NVIDIA got a green box. So today, NVIDIA got a bullish signal. Now, what I'm doing on this little chart right here is I'm not giving this bullish signal when the 5 crosses the 21, even though that's what it says up there. And I might change that up there. What I'm actually doing is giving the signal as soon as it crosses the 21 moving average. The 5 may not have yet crossed, but the price has crossed the 21. So let's take a look. Let's see what that looks like with NVIDIA. And there it is today. So what that means is, now let's see other times when it's crossed over. Right here was right at it. So I might have given a green bar right there. So if you had sold a put right there, right just below it, right somewhere just at the bottom, then, and it was for 2 weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 2 weeks, it would have ended there. You would have made 100% on your money just by following this little trick. And if you wanted to go short, if you wanted to sell the call instead, so it would have got a red box on this day. Let's see what the dates are. Would have got a red box on the 24th, same as my other signals. So if you had sold a call up here at 140, let's call it, sold a call at 140, 2 weeks out, then it would have gone 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and you would have made 100% again on that one. Doesn't always work though. So you have to, pick and choose your entries. You have to look at the other indicators to see what they're doing. Like right here, the MACD is just going sideways. That's usually a sideways market. So it's not really trending. So if you tried to do it here, there's where it crossed over, sold a put down here, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. You would have owned NVIDIA down here. And you would have probably sold the put at about 135. Let's say made a couple of dollars, let's call it. So 133 would have been your entry, and you would have owned it at 133. But then, of course, it went back up to 141. So even though now you own it, you still would have made $7 on the stock itself. You could have either sold it there, sold a covered call there, made some more cash, kept the stock, sold the stock, and then went short. Lots of things you could do. But that income generation doesn't always work. It means you might actually end up owning the stock. So you want to do this with stocks that you are okay with owning. Let's look back right here. Here's another one. So would have got a green box on this one, and probably would have sold it at, let's say, 135 right there. So let's try 2 weeks. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Right there, you would have made 100%. Even with this sideways movement right here. you would have made 100% on that one. So there's only one opportunity here where you would have been put the stock, but you still would have ended up making a profit on the stock itself, just through this little trend right here. So that's the whole idea around that. I'll show you another one. It did not get a green box today, but one that we've talked about quite a bit, and that's Lilly. And let's look at the same thing with Lilly. So right here, well, let's go back here. So right here, actually probably would have been here, went above the 21. So sold at 770. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Right here, it closed at 785. So you would have made 100% on that one. And then it went up, and then here it went down. So if you'd sold the call, probably at 795. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Closes at 802. So in that case, you would have lost money in that particular case. You could either close it out and lose a little bit. So that one didn't really quite work, but right here it would have. So there it would have had a green box in the short-term column. And so you would have sold the put for about 760. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Right there. Closed at 867, so you would have made 100% on that one. And then you would not have done anything. You would have just waited until we got a sell signal right here on March 7th. That was a week ago. So you would have sold a call up here at about 910, and 1, 2, 3, 4, 5. So that's today. So if we get the rally next week and it stays below 910 for the whole week, then you would have made 100% there as well. So that's just a little trick I wanted to point out for those that like to do options, especially selling options, puts and calls. Just watch this little box. Watch when one of these, so these are basically the high liquid, the top 10 in the triple Qs. So high, big cap tech names right through here. So as soon as you see one box turn, either red or blue, then you can sell an option and potentially make 100%. Just a little trick. Thought I'd show you that. All right, I think that's everything for today. What else have I updated today? I showed you the John Carter. Look at the sectors. Sectors right here. You can see the aggressive sectors over here are just starting to tick higher. And actually the defensive are too. So the whole market actually is starting to move higher. So that's good news. I did not have any stocks to check into today, I don't think. Oh, yeah, there was one. Let's take a look at this one. There was one stock, FMC. Let's look at FMC. So this is one that this person said that they bought it on the big drop. So he said the late January, but it probably was early February, right after earnings. Earnings was on February 4th. So if that's true, if you got it right down here, then you're in pretty good shape. So right down there, right now, somewhere, let's say in the $35 range, roughly. And today it closed at 41. So that's $6. That's almost 20%. In a short amount of time. So what is it going to do? That's the big question. Well, first of all, I think the whole market is going to rally. And I'll look at the charts themselves to see where it might rally to. But the whole market is likely going to rally next week, especially with options expiration. So it probably will go higher. It needs to get through the 50-day moving average right there. And then it probably will stall out. Let's look at this one. Probably if it makes it this high, this is the gap up here. The 200-day will be down to where the gap is. So around 54, something like that. But I'm sure somebody that bought in down here would be more than happy to have this go up to the 200. I think it definitely will make it to the 50-day. That's where you want to start thinking about, either taking profits or what I would do actually if you bought down here. So I would put a stop probably right in here at 38.50, right at the top of this support. So now you've got a higher high and a higher low. You got two higher highs. So likely we'll have another higher low at some point, but it probably won't come below this point. So 38.50, I would put a stop there. And then as it makes another higher high and a higher low, when it does that, it starts to go up again, move the stop up to the bottom of this low. And just keep doing that all the way up. So that's my comment on FMC. Let's take a look real quick at the individual charts and tell you where I think things are going to be headed. Here's the S&P. So there's our rally today. Here's the 21 right there. That's where I think it's going to get to, 5,800. So today we're at 5640, let's call it. So a couple of hundred points, 5,800, and then we have to watch to see what happens. It's also a major resistance area right there. So 5,800 is where it could reverse. Depends on how fast it gets there. It could make it there in just 1 week. So it's got the 200 and the 21 right there. If it does make it there in 1 week and goes through it, then the 50-day right up here at 59.50 most likely is going to be the area where it gets rejected. Now 58.50 I had mentioned before was a line in the sand. So that's sitting right about there, which is also a key support resistance level. So that could also be a place. So anywhere between the 21, 5,800 up to the 50, which is at, let's call it 5,900, somewhere in that range, you need to be watching for a reversal. And if we do get a reversal, then it's going to probably go lower than this previous low right here. So that's my opinion. It does not mean that will happen. Nobody knows what the market's going to do. That's just what I think it will do, just looking at the chart. Same thing over here. Now, in this case, the 21 is actually closer. So this one actually could make it up there and make it to the 50-day, a little bit higher up. Because the momentum and everything, there's a lot of room still to go. This is, you can see the 3x extremes right here that we hit just 4 days ago. So it's bouncing off those extremes. It typically goes back to the mean, reverts to the mean, which is the 21 right there. So that's where it's headed, I think, probably next week. And then we'll see if it can stay there or even move higher. Bitcoin also had a good day today. That is a bullish engulfing candle. So it opened lower than yesterday's close and it closed higher than yesterday's open. That is a bullish engulfing candle. And here's a MicroStrategy chart down here. It's starting to take off too. So this one I think was probably going to blow through the 21-day, probably get up here to the 50-day, 94,000, somewhere in there. All of the momentum indicators, everything is looking like that's going to probably keep on going up. So that's a very bullish end of the day today on Bitcoin. All right, I hope that was helpful. Please like and subscribe. We're getting close to 1,000. Let's try to get up to 1,000. For those that have not subscribed and are watching this channel, just hit the subscribe button. It doesn't hurt. You'll get notified whenever new ones come out, but I'm sure there are 25 or 24, whatever the number is, 25 people out there that could just hit the subscribe button and try to get us up to 1,000. That would be awesome. All right, thanks everyone. I don't know exactly where Zuber is. He's still on his cruise somewhere in Japan, I believe, but I don't think it's over yet. So I might be doing a solo session on Zuber's channel. That's one rental at a time. For those that are interested in real estate or would like to at least learn something about investing in real estate, that's primarily what that channel is all about. So looks like he is still in Japan. Yep, still in Japan, has not left yet. Still on the ship, it looks like. So got a little bit more left to go. So he might not be finished by Sunday. So for those over there on that channel, please come over to mine and subscribe. But I will do a solo probably on Sunday, talk a little bit more about this. All right. Thanks, everyone. Have a great weekend. Please be safe out there. And I will talk to you again on Monday. Take care.